All right, traders, as mentioned, we are going to go into news trading. For most of you, you guys commented news, and as promised, this is the video on how I trade news. And we're going to go through everything news trading. Firstly, on the list here is what to look for. And everything that we're doing is we're trying to create a bias for us on the day. Are we buying or are we selling? All right, very, very simple. Are we buying or selling? There's no two ways about trading. It's not about this mythical monster that you need to go and slay. No, we are just trying to determine whether gold and US 30 is going to buy or sell. On that, we only trade US 30 and gold on news days. Okay, these are the only two instruments we trade, purely due to the volatility we get on these two instruments. Okay, so there's no other instrument we trade, US 30 and gold. That's it, as simple as that. For the most part, I just trade gold purely because it's a commodity, it's a global commodity being traded. It's a safe haven in a lot of instances, and gold just makes a lot of sense to me, and it also reacts beautifully to fundamentals on the day of news. Okay, so we've talked about the first thing being how do we determine our bias for the event. That is why a lot of you guys are paying influencers, trading mentors, because you don't know what your bias is on the day, and I'm going to help you to determine that. Another thing, two things. Our bias is not just determined fundamentally. It's not just the fundamentals that we look at. We also look at the technicals. Fundamentally and technically, both are very important when it comes to determining your bias. What are the three key fundamentals that I look at for a NFP and a CPI event? The three key fundamentals I look at is the previous CPI print, or basically all of the previous 12 CPI prints. I look at the ADP employment change, that is usually 2 to 3 days before the NFP print. And then we obviously also take into consideration what NFP has been doing over a rolling period of 12 months. All right. These are the three key elements that I look at for my news trading. All right. Then we're going to talk about when to enter, and then we're going to talk about the trade management. So to come back to the fundamentals I look at, and I'm not going to do this for you. Actually, the Project G members, I do this every time before a major news event. I've got a little spreadsheet that I do, and I basically plot out the values of the previous 12 CPIs, the previous 12 ADP employment change numbers, and the previous 12 NFP numbers. You can go and do that yourself, and all you really want to see is there a correlation between the CPI print? Is there a correlation between the ADP, and is there a correlation between NFP? And I can already tell you now that there is a correlation, and that is partly what I use as well to try and determine the future print for NFP, for CPI, all of that, okay? The big one for me is ADP, for the most part, is going to tell you what NFP is going to be. Because remember, ADP is an independent labor market survey being done. NFP is what actual reporting the government. I think it's the labor statistics or something in the US. But that is something that the official government in the US put out. ADP is done by private companies, okay? And what you'll see is that the correlation, let's say this red line is ADP, and ADP has been trending lower, or on the actual week of the NFP release, ADP has already showed another drop coming for employment. Then I'm already leaning towards the downside on the NFP print, okay? But that is purely the fundamental side of it. As much as it's got a big effect as well, technically there's another thing that I look at, all right? And that is two things. On the week, for those guys that haven't joined us yet on our YouTube channel, please check it out, 2G's Trading. We trade live Monday to Friday, morning session and afternoon session. But the other thing for me is if fundamentally something is telling me that, let's say, for instance, gold is going to buy, then I want to make sure that technically on the weekly bias, I'm expecting the weekly to extend bullish. And then even on the day of the print, I also want to see that the bias is confirmed on the daily perspective. Okay. If you have not done so yet, go check out our Discord, because a big part of what we do is found in the education section on our Discord channel. So go and check our YouTube channel. It should be in the description of any one of the videos there. But this little cheat sheet right here, this is what I use to determine my weekly and my daily bias. Okay. So you can go spend some time on this, go print this out for you. It's a resource that we prepared for you. It's a resource that I prepared because for many years I was struggling with entry criteria, and I basically drew this up for myself. I had this printed in front of me so that when I'm looking for a buy, I know exactly what I'm looking in a continuation setup. I know exactly what I'm looking at for a reversal setup, and vice versa for sales as well. So this really helped me to just visually train my mind what to look for on the charts. Okay. So in terms of the weekly bias, I'm actually going to take you through. I'm actually going to take you through what we saw on gold last week. So this video is currently recorded on the 20th of August, 2024. And I'm going to break it down for you guys in a very, very practical manner of what we were looking at the previous NFP, actually CPI result. Okay. And we're going to talk about that quickly now. So going back to the week, last week of the month, that was when we were looking at CPI. It was actually last week. So what we were looking at for that week was that gold was at the all-time highs. It broke a previous all-time high resistance level on the flat-bodied area there, and we closed above. So everything for me was pointing bullish. Okay. Then what we had a bearish candle closure on the weekly, but still holding that key level. So again, technically it's showing me that everything is still pointing to the upside. We were still bullish on the day, okay, on the week. Then going into the day, if we go and check what CPI was on Wednesday, the 14th of August. Then into the event, we had a bearish daily candle closure the previous day on Tuesday. But here was the interesting thing for me on that day was that we closed bearish, but we still broke structure to the upside. Okay, so one daily candle closure is not enough to confirm a resistance for me. I want at least 2 daily candle closures before a resistance is confirmed. So Monday showed us already that we are looking to be bullish. The weekly was showing us to be bullish, and we executed on a bullish trade idea. On this day, we got the push, but we didn't get the push that we expected. Price only, I think, went up 100 pips and then reversed, but still we had the direction right on the day. Okay. This was the CPI release right here. And this is going to come to my next point that I want to talk about now. But that was the CPI release there. I think we got about, okay, not even 100. We got 85 pips. But again, beautiful, beautiful trade on the day. And what I want to come back to now is what are we looking for? Let me just do this in the trade management aspect. Okay, let me just zoom in here for us again. The big thing now is what are we looking for on the trade management side? Just going to clean this up for us quickly. All right, let's just put that there. US30 and gold we already spoke about. And then when to enter and when to manage the trade. All right. Here's the thing. A lot of traders don't know that brokers actually have increased margin requirements during news events. So what is happening during a news event? They call it dynamic margin requirements. So what they do is they increase the required margin just before the news event. So you're not going to get into positions, you're not going to be able to over leverage because the margin requirement is increased. And in layman terms, technically what happens is even though your account could be a 1 to 500 leverage, during that period, they actually reduce it to more like a 1 to 25. Okay, so you can't enter these big positions that you want to do. So we, as a rule, enter 7 minutes before the event. That is the sweet spot. We're still going to get some positions in. That is when we go and we start placing our positions. As per the reel that you guys commented on, we only put money into the account that we are willing to lose. There's no stop losses with news trading, guys. News trading is still ultimately a gamble. We're not gonna go backwards and forwards and saying news trading is not gambling. To a large extent, it is still a massive, massive gamble. It's so volatile, you can get slipped. So only put money in that you're willing to lose, okay? This is when I enter 7 minutes beforehand. How do we manage the trade? A lot of guys fail to actually capitalize on news moves. They get in, they're on the right direction of the market, but they then basically close out at a loss or even a break-even trade. Again, this comes from stats, and you can go and pull it for yourself as well. But for gold, I'm only ever targeting 150 pips. That even if it runs 400 pips, I don't care. Where did I find 150 pips? I basically take the previous 12 news events and I looked at the average move for the first 5 to 10 minutes, and that is where I got to 150 pips. That is the average move that you will get initially on that first 5 to 10 minute move after the news. So I want to get in and I want to get out. So again, it's a rolling average of the previous 12 releases. For US30, again, also coming from stats, is that we use 230 points. Again, that can become lower as time goes by or as volatility decreases. We could have an instance where in the next, let's say 12 months from now, this figure can change to 120 points because things have become less volatile and news is largely priced in. But again, as it stands at the current moment, 230 points on US30. That's the target. Again, a lot of what I'm showing you, you're going to need to do some work on your own. You're going to need to go and do some back testing, go plot out the previous news releases, go see what the average range was straight after the news event, and start being very clinical and statistical about your trading. Not everything is just thumb suck and how you feel on the day or what John said or what John's sister said. A lot of what we do in trading is to try and build a thesis, to try and build around an idea, and then to confirm my idea using data, using information that is available to us, and then actually making a calculated decision based off data, based off some experience, because to a large extent trading is also discretionary. You are going to have times when you've seen certain stuff happen and you maybe stay out of the market. That is where the experience comes in. But ultimately, it is all based on data. All right, guys. So this video is not too long, almost 15 minutes. I hope this helps. If you want to trade news events live with us and actually see how we go into depth before the news event, please check out 2gstrading.com. All right, guys, if you want to go in here, I want to show you guys it is 2Gs, then it is apostrophe, if I'm not mistaken, trading.com. Go check out our website. We've got a monthly subscription. You guys are more than welcome to join us. We also give out daily analysis. We give trade alerts, all of the rest. But check it out, 2gstrading.com. And we'll see you guys on the next one. If you like this video, please please hit that like button, subscribe to the channel, and we will see you guys in the market. Peace and love, baby. Cheers.